Welcome to the Money Compass. If you're here, it's because you're serious about taking control of your financial future. Today, we're diving deep into actionable strategies that can help you save and invest more efficiently. Whether you're a beginner looking to get started or someone with experience aiming to refine your approach, this video will equip you with the tools you need to make smarter financial decisions. Let's get started. Let's begin with saving. Saving money is the cornerstone of financial stability and the first step toward investment. The problem? Most people approach saving the wrong way. They save what's left after spending instead of spending what's left after saving. This small shift in mindset is transformative. To make this work, start by setting up a dedicated savings account that's not directly tied to your checking account. Automate your savings by scheduling transfers on payday. The less you have to think about it, the more consistent you'll be. But how much should you save? Experts recommend the 50-30-20 rule. Allocate 50% of your income to needs, 30% to wants, and 20% to savings or debt repayment. However, this is just a guideline. If you have ambitious investment goals or want to retire early, aim to save 30% or even 40% of your income. Aggressive savings might sound tough, but the rewards are exponential. Now let's talk about a critical tool for saving: high-yield savings accounts. These accounts offer significantly higher interest rates compared to traditional savings accounts. Platforms like Ally, Marcus by Goldman Sachs, and Discover often top the charts. By parking your emergency fund in a high-yield savings account, your money works harder without any additional effort on your part. Speaking of working harder, let's shift gears to investing. Investing is the most powerful way to grow your wealth over time, but it's also where many people feel overwhelmed. Let's simplify it. Think of investing as planting seeds. The earlier you plant, the more time they have to grow into a forest. Time is your greatest ally in the market. For beginners, index funds and ETFs are excellent starting points. They offer diversification, which spreads your risk, and have low fees. Two popular options are Vanguard's Total Stock Market ETF, VTI, and iShares Core S and P500 ETF, IVV. These funds give you exposure to the entire market or the top-performing companies, allowing you to ride the overall growth of the economy. But what about picking individual stocks? While it can be tempting, it's risky and time-consuming unless you've done your homework. If you want to try it, allocate only a small percentage of your portfolio, no more than 10%. Focus on blue-chip stocks with strong financials and a proven track record. Now, here's where we integrate saving and investing seamlessly. Utilize tax-advantaged accounts like 401, Ks, and IRAs. A 401k with employer matching is essentially free money. Contribute enough to get the full match. It's one of the best returns on investment you'll ever see. For long-term growth, open a Roth IRA. It's funded with after-tax dollars, so your withdrawals in retirement are tax-free. Over decades, this can save you tens of thousands of dollars in taxes. Before we move on, if you're finding value in this content, take a moment to like this video and subscribe to the Money Compass. It's a simple way to support the channel and ensure you never miss out on strategies that can transform your financial future. Now, back to the video. Let's discuss a trend that's reshaping the financial landscape: the rise of fintech platforms. Apps like Acorns, Robinhood, and One Finance have revolutionized how we invest. Acorns rounds up your purchases and invests the spare change, making investing effortless for beginners. Robinhood provides commission-free trading, opening the door to investing for millions. One Finance combines the best of robo-advisors and self-directed investing, allowing you to customize your portfolio while automating contributions. But technology isn't without its risks. Be cautious of high-risk platforms or investment schemes promising unrealistically high returns. Stick to tools that have strong user reviews, transparent fees, and solid security measures. Your money deserves to be in safe, reliable hands. Speaking of risks, let's address the current economic climate. Inflation, interest rate hikes, and geopolitical tensions are dominating headlines. How do these factors impact your saving and investing strategy? First, understand that inflation erodes your purchasing power. If your money isn't growing faster than the inflation rate, you're effectively losing wealth. This makes investing even more critical. With rising interest rates, consider re-evaluating any debt you hold. If you have high-interest debt, such as credit card balances, prioritize paying it off before aggressively investing. On the flip side, higher rates can benefit savers using high-yield savings accounts or bonds. Diversify your portfolio to include inflation-resistant assets like real estate or commodities if it aligns with your risk tolerance. Let's take a historical perspective. In the 1970s, the US faced stagflation, high inflation coupled with slow economic growth. During this time, gold prices surged as investors sought a safe haven. Fast forward to today, and we're seeing parallels. Precious metals and cryptocurrencies like Bitcoin are gaining traction as potential hedges against uncertainty. While these assets can be volatile, a small allocation might provide balance in a diversified portfolio. Another lesson from history: the 2008 financial crisis. Many investors panicked and sold their holdings at a loss, only to miss out on the recovery. The takeaway? Stay the course. Markets are cyclical and patience is often rewarded. Avoid trying to time the market. It's nearly impossible to predict short-term fluctuations consistently. Instead, focus on your long-term goals and trust the power of compound growth. Finally, let's touch on one of the most overlooked aspects of saving and investing: mindset. Your beliefs and habits shape your financial reality. If you view money as a tool for empowerment and opportunity, you'll make decisions that align with growth. Practice delayed gratification. Every dollar saved and invested today is a step toward financial independence tomorrow. So, where do you go from here? Start small, but start now. Review your budget, open that high-yield savings account, and make your first investment. Remember, the journey to financial success is a marathon, not a sprint. Celebrate small wins along the way and stay committed to your goals. Thank you for watching The Money Compass. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you'll be the first to know when we upload new content. Until next time, stay focused, stay informed, and keep your financial compass pointed towards success.